All right, good morning, subscribers. It is uh, Wednesday, March the 12th. Very choppy trading day yesterday. I'll get to that in a second, just so you see here track record. I have the performance another. I think we're still up a little more than 7% year to date, but you can see track record here mostly green, a little bit of a spout of red here yesterday, and that's just basically because the market was really just too choppy to trade. And this is an easy way to sort of see where you have markets that are acting funky. So the goal is to end this bout of red and go back into a winning streak like we've really had for most part of the year. So if we look at the S&P 500 here, note that yesterday basically we had a bit of follow through selling or basically just give up on a long side after a few days of the market doing nothing. I said yesterday that so far this year we've essentially had a bit of a rhythm where we had you have a few days, a couple of days of action every week, followed by basically boringness for the rest of the week. And it's not even uncharacteristic in general, but it has certainly been that way so far this year. So far this week, of course, nothing. We've had nothing but chop. Even yesterday, even though we had a down day, there's really not much to do for the trading front. You saw that with some of the stuff I pinged back and forth. So let me go and just quickly go through the open positions that I still have. First of all, let's talk about a pain trade. JCPenney just horrible reversal intraday, and I haven't yet gotten stopped out, but this stock here better do something right here, right today and alongside. Otherwise, I'm definitely getting out. But I think through the sort of medium term lens, the stock actually still looks very good. It just got chopped in half. Or more worse than that yesterday. I ended up buying this at the highs of the day, so a lot to be learned here about buying stuff on choppy days. But then again, this is just all part of the business. But if you look at the stock through sort of medium term lens, you can see very good rally off the bottom here. In February, up gap the following day, then just continued bullish action all the way through. And even here right now, it bumped into lateral resistance. But I do think the stock has room up into the $10 to $10.50 range. We may have to just give this another try if we get stopped out. So, but you can see just very characteristic of yesterday's tape, just a natural reversal. And by the way, when I have my afternoon calls after the bell with a lot of my colleagues and hedge fund managers and other things like that, I had very few people that said they had a decent day yesterday. Most of them had just a very choppy day and ended up sitting it out, more or less just like what I did yesterday as well. A little bit more upbeat here is line. I'm still short line. I have a price target around 29 bucks. I do think this has room down to 28 or so. But I keep talking about the stock, and you can see basically just broke this downtrend. It's accelerating lower. There's even in the bigger picture of the stock, essentially here found resistance, which is about a 50 or 61.8% retracement of this entire faltering off the 2012 highs. Then BWLB, another perfect example of yesterday's just completely useless price action. Look at that beautiful attempt again yesterday of trying to overcome this triple top. Nasty reversal. So we need to see how the stock opens today. But that's basically just means the stock has to do more work and consolidate, maybe even go lower. Which I don't want to have any part of. But then ultimately, I do think the stock overcomes this level. The question is more a question of time, so we have to give this a little more time. ABX, with the market doing just crap yesterday, basically just got a small bid. But again, I say this every day. Stock through this lens is still holding in there. It's just consolidating, and that's about it. So these minor stocks a lot of times are just kind of snoozy, so they need more time. Tesla, another down day yesterday. After the news out of New Jersey, they're going to start banning direct car sales. It's really still also in this consolidation phase. Where if this goes down to 200 or 220 or stops right here, I don't know. I'm still short 280 strike at June calls, so bit of a different dynamics there in that trade, but I feel good with that. We'll adjust the trade once the stock actually does a little bit something more than to consolidate in this big area. So for the time being, I'm just kind of collecting time premium or very little, obviously, because given the fact that my options have another 4 months to go. So that's 3 months. I'm sorry, and that's pretty much that. In terms of other things, watch list. There's a ton of stuff happening. Look at even VMW. I discussed VMware yesterday. The stock had a great rally yesterday, but just like The rest of the tape just couldn't do anything. Intraday gave up all of its gains, or most of its gains, I should say, off the top. It's just a very nasty day. It just doesn't look like anything to do. On the upside, McDonald's looks very good. That's on the watch list today. I'll add it, and you'll see it there. Just a beautiful day, big volume breakout, I think 3+% move, which for McDonald's actually is a big move. So this may be something to do alongside. Maybe you can work its way up to the last year's highs in the low 100s. Here too, technically, we had very good, very good signs that stock's going to do this with a gap down on Monday, March 3rd, which was reversed the following day, and then even on Monday when the company came out with rather weak comparable sales, stock actually didn't move much. It was all about waiting for this retail or this conference yesterday where the CFO spoke and said that we're going to return some more cash. Actually, the setup doesn't look a whole lot different from what we saw in Hewlett Packard. I don't think this move's going to be nearly as explosive, but it was very similar. We had some very lackluster trading action here for some time in August and September of last year, and then the analyst meeting came and the stock rallied and was off to the races. So we'll keep that pattern in mind and see if there's something like that at McDonald's. But again, the stock's a much slower mover than Hewlett Packard, so it certainly won't have the same dynamics. The other restaurant is, or in this case, just a coffee shop. Starbucks looks very good all of a sudden after Schultz was on TV yesterday, the CEO, and basically said that the rising coffee, by the way, coffee as a commodity. The Brazil variety is up 85% year to date, ridiculous. But so just keep that in mind. We have a big rally in the commodity, and at some point that's going to catch up with the stock, I would suspect. At the very least, once the stock, the cyclical type of stocks like these will have some sort of downturn once this cyclical bull market comes to an end. So I think for the meantime, though, the stock can easily move into the high 70s, maybe into the low 80s or something like that on the back of this move. If it's at immediate term resistance, but I do think the stock here looks pretty good. So those are a couple things I'm looking at. Any questions, as always, please let me know, and good luck out there.